Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, zinniawealth.com. Check out our website today. There's a lot to go through there. You can hit the media tab. You see the podcasts. You see the interviews. You see a lot of stuff right there. There's also an education tab where if you click on that, there's a drop down. It says useful guides. And there's a ton of stuff there that you can download at no charge at all about 401ks and about pensions and about women in retirement and about all sorts of different topics that deal with retirement. Check it out today, zinniawealth.com. All right, so Sharice, at this time of year, you turn on the radio on a music channel, and you're going to hear All I Want for Christmas Is You from Mariah Carey. So Mariah Carey has obviously made a lot of money with all of her music, but she, during this time of year, in the month of December, she makes between $2 and $3 million just on the royalties, just from that one song.
Wow.
Amazing.
That is amazing.
It's crazy.
Oh my gosh.
So to me, when you think about that, those are royalties, obviously, right? Okay. So there's a retirement lesson here, because what Mariah Carey did years ago is she recorded this song, and it's paying off for her now long into the future. So you think about what you do for retirement. You save and you save and you save, and you do everything you can to get ready for retirement, and everything that you did your whole life is going to pay off for you in retirement. Same kind of thing, but with one key difference here. If it's just savings and you're peeling money out of your savings to live in retirement, that's one thing. But what Mariah Carey did was she created an asset that pays income, that pays a paycheck in retirement. And Sharice, we can do that. We can do that very same thing. Let's call it retirement royalties, okay? So let's talk about that, because we have, it's like we've got raw materials and we bring them to you and say, Sharice, make something out of this. And that's kind of what it is, isn't it?
It is. So when you're prepping for retirement, I would say some people we've helped 10 years before retirement, but for sure 5 years before retirement. If you got some IRAs and 401ks that you can move, there are income investments. There's quite a few income investments that could provide those royalties, those guaranteed income streams for life, right? It's kind of your pension plan, your private pension plan that you get with advisors like myself. What the value is of that is that you know that paycheck is going to show up every month for the rest of your life, the day you retire and you turn in those keys to retirement and you exit those double doors. You want the very next month to turn on this one paycheck. You're going to have other paychecks, but this one paycheck, you're going to love this one paycheck. And the reason is that paycheck is the one paycheck that's probably going to pay the rent, the mortgage, the insurance, the light bill, the grocery bill, the gas at the gas pump. And then, you know, if that check, along with your Social Security, covers all your fixed assets and you have more assets that are saved that are in the stock market, that's your fun money. That's your, I hope this puppy keeps growing and we're going to live off it and travel off of it. So you can build royalties in different ways. And I will say, we have about, I would say, 3 to 4 ways to build those royalties, which is really key. Now, some people are probably thinking, well, are those royalties dividend stocks? No, it can be. But I want something that's more guaranteed and consistent, and it can never stop, because dividend stocks, those companies can stop paying dividends. They can lower the dividends. They can raise the dividends. So we need something more consistent. So we can build that in, but it's I call it the less consistent plan. And so, but for the long term, those could be very valuable for kicking in for inflation. So these royalty plans, you can also build in an inflation plan where every time inflation goes up, your check goes up. So it's pretty cool. They've really changed over the years. So having those royalties, like I said, income makes the world go round. And more people want the predictability. They want the consistency, and they just want their money to show up because they've experienced a lot of things through their parents who either didn't have pension checks, and the ones that did, they like it now. They've experienced lots of losses over the last 30 years while they're working, and the ups and downs, and they already know my $1 million, if I stay in the portfolio I'm at and I'm retired, that $1 million could drop down all day long to 700,000. And part of this royalty plan, it's not to make you rich, but it's definitely not to make you poor. And I don't want to make you poor in your spending plan. If we build out a spending plan and say, hey, we're going to spend $20,000 more a year or $50,000 a year more for the next 10 years during the go-go years, I want to make sure those go-go years are your best and those checks show up. So we have to build out that royalty plan to make sure those dollars are there so you can do what you want to do. Because the last thing you want to do is wake up one night and be pacing up and down the hallway with your wife at 2 o'clock in the morning saying, woulda, coulda, shoulda. Why didn't we build in our royalty plan, our income plan, so that our go-go years, we could have it guaranteed and never have to worry about what the stock market did on some of our money.
You know, Sharice, we've said many times over the years that when you get into retirement, there's only a couple of places really to put your money. One is the stock market. The other is the insurance companies. The other is the bank. And then the others may be real estate. Okay, so you've got those four to really mess with, right? Mm-hmm. So I'm going to read for you just a headline. This came out of Financial Advisor magazine this week. This is all financial advisors talking, okay? Mm-hmm. And they said 9 out of 10 clients want something that we don't generally provide. So here come the insurance companies. It says at the end of the article, for the good of the client, we have to embrace this relationship. So when you go to sit with a financial advisor and they look at you and say, annuities? Nope, never, not doing it, not doing anything in that insurance area. That's not really giving you good service. That's not really showing you everything that's available. And they're also eliminating one key element of your retirement, and that is the ability to generate guaranteed income. So, Sharice, I mean, you make all of this available to everybody. You say, here are the options. You choose. Let's talk through it. So.
That's right. That's my Christmas gift to you guys.
There you go.
Let's build royalties for the next 30 years of our lives in retirement.
I love it.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Sharice Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.